everybody. Welcome to the Trading Market Technicals morning call video for Friday, November 22nd. Looks like the one day down was a one-hit wonder. Market participants buying back the dip. Dow Jones up 109, Nasdaq up 47, S&P up 14, and the Russell up almost 20 points. Looks like the uptrend continues. Can't fight the trend, guys. That's the bottom line. As much as we feel like this market has come too far, too fast, which I'm definitely in that camp. And I am a cautious bull, but I am very, very cautious in this crazy market. That's for sure. At any given moment, the market can turn around and someone can hit the button and start taking profits, and then you get that little gravy train rolling down the hill again. But until then, I'd be looking for the best stocks to trade, best setups to trade, and no question about managing your risk properly, because this market is nutty. No question about that. Anyway, I want to go into some of the charts, but I do want to show you just a couple of small little things. We mentioned a few ideas, and one was the crude oil, and I love crude oil at these levels. I do like it still, and had a bunch of emails that a couple guys took them for a trade yesterday. Fantastic. We still, though, remember, we need to take out this area here at 95.25, and this is the WTI crude, okay? This is the crude oil itself. But USO is very, very similar, almost to the penny. The way the charts look like each other. But if you look at the bearish symmetry, which we still have lower lows and lower highs, we are now sort of kind of breaking out of the uptrend. But remember, this could easily roll back down again. We are at the 20-day lows here on these price channels, and I do like the fact that we are basing here for several days, at least over about I'd say a good week and a half. So I do like crude oil here. For me to play the trend higher and more like a swing trade, I like to see another day close, maybe push higher, and then back test this sideways consolidation, this upper trend line here, and hold to make that higher low from this area to the low here, and then move up. And then for a swing trade, you can start building a position to the long side. Until then, all this is just a counter trend trade and a quick trade in and out of crude oil. And if you're not that fast in your trading, then it would be best just to step aside until until crude oil can actually break bearish symmetry. But I do like the trade still here. I like it. Crude oil usually has strength up until the end of the year, so we have about another 4 or 5 weeks, really another 4 weeks, and then most of the asset classes kind of die into the last week or two of the new year, and then of course the first week of the new year itself. But I do like it. I like crude here for a big bounce going into the new year itself. So look for a spot, look for an entry based on your trading plan. Now, another sector I really like is the banks. I really like the banks here. We have now broken out of this sideways consolidation of the highs. Now, remember, the first day, I'd like to see a little bit of a continuation, maybe another follow through today, kind of chop around here, creating another base, just like crude oil, like I showed you, and then move higher. Remember, rising interest rates are going to be good for the banking sector, okay? So I do like the banks a lot here. All right, next thing is, let's talk about gold. Well, with the as far as the tapering is concerned, it's not going to do well for gold. And gold is actually now at this conflection point here. We do have a head and shoulders pattern. I love gold short, but to me, I think gold might bounce first before it rolls back over again. I like gold, but I like gold back up to 1300 area. Right up in here, if we can get a good bounce into the 1310 and then fail, that's when make that lower high from here. Lower high here, and then a lower high here. If it were to happen, I would like to sell gold short here in this area. Other than that, I'm going to basically let this thing go because, again, look at where we are, and if you look at way back up in this area here, we're really, we've been moving to the downside just about every single day. So, and I keep mentioning gold is in a bear market, but we are, we're due for bounces. Nothing goes straight up and or straight down. But I think gold here may be in a spot for a bounce, and again, a dead cat bounce, if anything. Take a look at palladium, and you can see here why, because we are coming into some support here in palladium, and palladium is the silent leader. So I would like to see palladium. If palladium does start to move higher, at least into the apex of the symmetrical triangle, you're going to have gold run higher with it. And then let's see if palladium starts to fail, and that'll give you a really good sell signal in gold that gold is indeed moving lower. So take a look at that. So watch gold next week going into the coming days. As far as today's concerned, we're up really small. We're basically flat in the minis. I mean, this market is so extended, so tired. I mean, and the only thing that's moving is the indexes. The stocks are not really moving. Yeah, you do have some rotation coming out of technology, going into the banks. Yes, that's true, and some of the banks are moving. But if you look at it as a whole, and I'm sitting in front of the screens all day, I don't see a lot of movement in stocks at all. And looking at certain indicators that I've showed you in the past, they aren't moving. It's all of the indexes that are moving, and that's really not a good sign. And that's why I am very cautious here in this market. Take a look at the tick. Tick actually end of day tick got it back above zero, which is a good sign, but really not really nothing to write home about. I like to see the tick above 600, anywhere up here, 600, 700. Then you got real buying coming into the market. This is not anything great, anything to write home about, especially when the Dow's up 109 points. Not really too good at all. Here's the NYMO telling us nothing other than it's neutral. Plenty of room to run to the upside, plenty of room to run to the downside. So really nothing telling us in the McClellan oscillator. VIX actually gave us a real good signal. We had that sell signal in the market, buy signal in the VIX, and now we kind of rolled over. I think VIX is going to chop around here for a while to these lower trend line, which is actually very big support in the VIX. And then I think the VIX eventually will move higher. But again, it's not what I think. It's what the market does, and that's what pays us, the trader, the investor, the long-term swing trader. That is what we need to really pay attention to. All right, guys, so let's take a look at some of these charts here. We are now met two extensions in the E-mini S&P. As you can see, we're flat here in the pre-market session. We were up $1. We just kind of sold off in the last half hour, 15 minutes or so. But we met both extensions. That, to me, this is a huge stretch from October 9th lows. I mean, this is a little bit much. Looking for a pullback here. We had 3-day pullback, which was really nothing at all, maybe 1.5% at all, if that. So we are really in dire straits for a pullback. Do we need to? No, not at all. We could actually go to the extension here, our third extension of the 216.8, and then maybe sell off. But no one knows where this market is headed. And with this, with the crazy Fed just literally just going nuts, pumping liquidity into the market, to me, I think there's a deeper issue here with this economy. Why the Fed continues to pump money like this? If we were getting some good readings and some economic data, there's no reason why the Fed can't taper earlier than later. But to me, that I think there's something deeper in what the Fed is really letting us know. But anyway, that's again it's all it is hearsay. But keep an eye on this, guys. That's why I'm saying be cautious. We hit two extensions already. We're very stretched, and the markets are extremely overbought. Again, not a sell signal, but you need to understand and need to be cautious here. So if you are holding positions overnight, and if you're not hedged at least a little bit, it could be detrimental. You could one day come in and see the market down 20 handles in the S&P, and then by the end of the day, could be down 30, and that is not out of reach. Okay, take a look at let's take a look at the monthly chart. As you can see, I mean, this is from the 2009 lows, guys. We're coming into our extension of 1846. Now, that's 40 handles. That's another 50 points. I mean, if the market wanted to, it could do it in 3 days. And to me, this is a big move, man. This is a big movement in the markets here. And now we're coming into these extensions. And now, as you can see, the candles are moving higher and higher, and we're getting way extended from the 8. Forget about the 20. Look at the 8. So we're at 1675 on a monthly, and the 8. That's over 100 points. And then as far as the monthly is concerned, you're talking over 200 points coming back to the mean here. So this makes me nervous without any pullback. Now, if we had a pullback, 2-3 month pullback, 5-month rally, a 3-month pullback, this is fine. This is what you want, the sidestep, the stair step, excuse me. But when you don't have anything from from 2012 May, literally up almost every month. That's a concern for me. All right, so now here's the first downside target to relieve any upside pressure. Would have to be the 1775. This is going to be the area, and why? Not just a little area here that we hit, but if you just scroll back, you'll see this was resistance now acting as support. As you can see here, 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 and now here, touched it literally to the penny, and we got very close here, and then we just exploded back to the upside. So buys or dips are out in full force, as you can see from yesterday. This is the first area that we need to close on a closing basis below 1775. Okay, when we get below 1775, 1774, that's what we're going to need to alleviate a little bit of that topside pressure. Maybe put in a local top. Take a look at the spiders. Again, we had 2 days down. The third day was really just an inside day. We virtually unchanged, and now we're back up here. Again, though, we're going to need to really take out the highs here in order for us to continue to move higher in the spiders. So we did have a small outside day in the spiders, but again, guys, you can see how stretched we are. Diamonds, same. Didn't quite take out the highs, but the Dow did make 16,000 for the first time in history, and we just continue to make new highs here without any signs of selling pressure. Transportation sector did okay, despite the fact that crude oil was up $1 and change. So just let's keep an eye on this technology. The transports. If we start to break down below the 20, the next side is going to be the 122, and then of course the 50-day moving average. But by the time we get down here, the 50-day moving average will continue to rise high. Remember, if you look at all of these moving averages in the charts that I show you, we continue to point higher. So you can see here the 20-day, the 50, the 200. So we have bullish symmetry in these moving averages. IWM, again, still weaker than the other five, but we are moving higher. We did take out a nice big engulfing candle, and now we're at this little area, this little top here. But watch the Bollinger Bands. You can see that we're starting to tighten here. So there's pressure that's building in a lot of these areas. Now, XLF. Here's the banking sector pulling out away from this little consolidation area. Banks look great. Yeah, we are a little bit extended here. We're overbought, but again, overbought can stay overbought, and we can continue to run higher. And this, to me, has a lot of legs left in it. And let me show you a couple of charts here. Here's Goldman. Goldman actually had a little bit of a down day. Obviously, we had previously, but starting to wake up again. And again, at 164 really was your buy-in. I mean, right here, that 8. Now, if you're not into Goldman, I think I would just let this one go, as well as the other banks, unless we get some sort of a pullback. I think the banks are going to be good. The one stock that I do like that really hasn't gone. Now, like with J.P. Morgan, give you an example. We were talking about J.P. Morgan here when we had that big pullback. We had that little consolidation pullback, and then we broke out. Now, to me, J.P. Morgan is gone, and now you can see how far away we are. We need a pullback in J.P. Morgan to get back in. Other than that, I think J.P. Morgan now is taking out the highs. You can see this here clearly. Great trade. I know a lot of people sent a bunch of emails that they took J.P. Morgan for swing trades. That's great. Me personally, I'm not swing trading at the moment. Not holding too many positions, if at all. Only because this market's way too crazy to hold any positions overnight in the overnight session, unless if you're doing some sort of option spreads, which is basically hedge. But if you look at the Goldman, J.P. Morgan, we need a little bit of a pullback. We're way extended. We're just about now 2 standard deviations away from the mean. So J.P. Morgan needs a little bit of a pullback. But if you look at Citibank, Citibank is what I really like. Well, if I can get a chart, you know what the. All right. So if you look at Citibank, letter C was really something that I'd like to see. Let me see if I can get the chart up real quick. Okay, charts loaded up. Citibank, as you can see, letter C, just like J.P. Morgan, looking for a breakout. I think Citibank rips to the upside, and we had a little bit of consolidation here for 3 days, And now I think Citibank is going just like J.P. Morgan. We need a little bit of volume now. Remember, watch the volume on a breakout here. We had some consolidation for a couple of days in volume, which is fine. That's what you want. Now, when we have that breakout, we need volume to confirm this breakout. But I think Citibank goes to at least test the highs here. So I think you got at least a good $3 on the upside in Citibank. So watch Citibank for any type of pullback to get in Citibank. Okay, and just a couple of small little things. Now the IGN networking sector, again, still got the head and shoulders pattern, but we still can't get away from this neckline. So it's still valid, but we start taking out the right shoulder, then I think all bets are going to be off here. Well, if you're a bull, you want to see money flowing back into technology, that's for sure. Okay, and just to show you, Apple here really not doing much of anything. So really, look at the Bollinger Band here. Keep an eye on Apple because Apple is building a lot of pressure. Look at the Bollinger Band. Doesn't tell you which way it goes, but if you look at it, we got a lot of pressure building here for the last month of probably all of November, actually. Really hasn't gone anywhere. So pay attention. Once we take out the 530 or the 511, I think it's going to go in that direction for at least a little time. So if we break lower, I think we go lower for a while. And if we break higher, I think we're going to test the highs. And again, doesn't tell you what direction, but let's keep an eye on Apple for maybe a trade setup. And then lastly is the Qs. As you can see, we're just kind of chopping around this area. All right, guys, today's Friday. We do usually get a bullish bias to the upside. Futures have turned positive again, up 75 cents. I don't see anything stopping this market right now until there's some sort of a catalyst. This market wants to go higher. The Fed is pumping liquidity. We have POMO auctions almost every other day, pumping billions of dollars. Don't fight the trend. Unless you're hedged, it's one thing. But I would not be looking to get short this market. All right, just stay tuned. Take the best setups possible. And if you don't find anything, you don't see anything you like, just take a step back. You know, you need all you need is a couple of trades a day, or for that matter, a week, and you can make some good money in this market. All right, guys, stay safe. Have a great weekend. We'll talk to you on Monday.